In this video, how to change your state of tax residency as an American. Imagine slashing your state tax bill by moving from a high tax state like Colorado to a tax-free state like Texas. Maybe trading snowy Denver for sunny Austin, all while keeping more money in your pocket. Switching your state of tax residency in the USA can be a game changer for retirees, remote workers, or digital nomads looking to optimize their finances. But it's not just about packing your bags. You need to prove your move to avoid audits or double taxation. Today, we're breaking down exactly how to switch your tax residency step by step with all the practical information you need to know to make it stick. Sometimes we call this the Texas two-step, but you could really do it moving to any zero tax state, whether it's New Hampshire, Florida, maybe Nevada, right? So tax residency determines which state can tax your income. And each state has its own rules for defining tax residency, centered on two key concepts: domicile and statutory residency. Domicile is your permanent home, the place you intend to return to, while statutory residency often hinges on spending over 183 days in a state. Colorado, with its 4.4% flat income tax, is a quote-unquote sticky state, meaning it aggressively pursues former residents for taxes if ties aren't fully cut. Texas, one of the 9 states with no personal income tax, is a top destination for tax savings, per the Tax Foundation's 2025 State Business Tax Climate Index. Switching from Colorado to Texas can save you thousands annually, but you must sever Colorado ties and establish Texas as your domicile. Let's walk through the steps to make it happen, avoid the pitfalls, and ensure Colorado or whatever high tax state you're coming from respects your move. Throughout this video, I'm going to use Colorado as the example of the high tax state and Texas as the example of the low tax state. But obviously, a lot of people are escaping California. People are escaping New York and other high tax states. People are going from New York to Florida, and everything we're sharing in this video is equally valid, the overarching principles behind this. So we have a couple steps here. We have a 5-step process. So step 1 is to establish a domicile in Texas. To claim Texas as your tax residency, you need a permanent home there, your quote-unquote true home where you intend to stay indefinitely. Rent or buy a property in Texas, like an apartment or a house, and update your address with key institutions: the IRS via Form 8822, the U.S. Postal Service, banks, and credit card company. Get a Texas driver's license or state ID within 30 days of moving, as Colorado may view a retained license as a tie, per the Colorado Department of Revenue. Register your vehicle in Texas through the Department of Motor Vehicles, and update your insurance with your Texas address. Register to vote in Texas, and cancel your Colorado voter registration, as voting is a strong indicator of intent. Posts on Twitter emphasize that Texas's lack of income tax make it a favorite for domicile changes, but you must act decisively. Pro tip: secure a long-term lease or deed to prove your Texas commitment, as temporary lodging like hotels often doesn't count. Sometimes it can in the short term, but you're going to need a long-term solution to having a rock-solid address in your new zero-tax state. Step 2 is to sever ties with Colorado. Colorado will challenge your residency change if you maintain significant ties, like a driver's license, property, or social connections, per the Department of Revenue's guidance. You can check that out on their website for Colorado. So the goal is sell or transfer any Colorado property, like a condo in Denver, to family or a trust, or convert it to a rental. File a non-resident return for rental income. Cancel your Colorado's driver's license and voter registration. Close Colorado bank accounts or update them to your Texas address. Our recommendation is, if you have any local Colorado banks like credit unions, things that don't operate nationally, cancel those. And then the national banks you work with, maybe it's Chase, Wells Fargo, etc., you update the address. But ideally, anything that's a Colorado or whatever the state is, right? Any sort of local bank, cancel those, close your account at those local banks, and then in Texas or Florida, whichever state you move to, open local banks there, like the Florida Credit Union, the Texas Credit Union. If you have kids, enroll them in Texas schools, move all your memberships like gym and church affiliations, your doctor, your dentist, move all that to Texas as Colorado audits social ties. Avoid spending more than 183 days in Colorado annually, as this triggers statutory residency, taxing your worldwide income. Quick tip, keep a travel log to prove you spend most of your time in Texas, using apps like TaxDay I've heard of to track your days. Me personally, I just use a Excel sheet. Step 3, file the right tax forms. If you move mid-year, you'll file as a part-year resident in both states. For Colorado, complete the DR0104, the individual income tax return, and DR0104PN, which is part-year resident, non-resident tax calculation schedule, to report income earned while a Colorado resident, typically January to your move date, right? A partial year return. Texas has no state income tax, so you won't file a return there unless you earn Texas-sourced income like rentals as a non-resident. If you keep Colorado-sourced income like rental properties, file a non-resident Colorado return for that income only. Colorado offers credits for taxes paid to Texas on overlapping income, avoiding double taxation. For example, if you earn $50,000 in Colorado before moving, you'll prorate taxes on that portion. Pro tip, file even if you owe nothing to Colorado to establish your move date and avoid audits. Step 4, prove your domicile change. Colorado's Department of Revenue requires you to prove you've abandoned Colorado domicile, especially for high earnings, as quote-unquote sticky states like Colorado audit aggressively. Keep records like Texas utility bills, lease agreements, or voter registration to show intent. If you return to Colorado frequently, limit visits to under 183 days to avoid statutory residency. For remote workers, update your employer's address to Texas, as Colorado may tax income from Colorado-based employers under quote-unquote convenience of the employer rules. If audited, provide a paper trail, bank statements, Texas vehicle titles, or even pet relocation records, as a 2017 New York case showed a dog's move sealed a domicile change. Quick tip, use a Texas mail forwarding service like Escapees RV Club for a stable address if you're nomadic. And step 5, understand ongoing obligations. After switching, Texas won't tax your income, but Colorado may still claim non-resident taxes on Colorado source income, like rental properties or businesses. File a Colorado non-resident return, the 0104, for such income, prorating taxes via the 0104PN. If you're abroad, Colorado won't tax you as a non-resident unless you have Colorado income, but you must prove you've cut ties. Maintain Texas residency by renewing your driver's license, voting, and keeping a Texas address. If you're a retiree, Colorado exempts up to $24,000 of retirement income for those 65 plus, but switching to Texas eliminates this complexity. Pro tip, consult a tax professional to ensure all Colorado ties are severed, especially if you own assets there. So next, some pitfalls to avoid. First, incomplete tie breaking. Keeping a Colorado's driver's license or property can trigger audits as Colorado presumes continued residency. Second, spending too much time in Colorado, as we've talked about, 183 days. Third, delayed documentation. Update your address and licenses immediately to avoid disputes. Fourth, ignoring Colorado-sourced income. Rental or business income requires non-resident filings, with penalties for up to 12% for non-compliance. And fifth, assuming a move is enough. Colorado requires proof of Texas domicile. So document everything, every step, save your receipts, your utility bills, voter cards, everything you can to withstand audits. Some practical tips: hire a tax advisor familiar with cross-state moves to navigate Colorado's stickiness. We have a link in the description. You can book a call with us, and we can answer all your burning questions about the Texas two-step and implementing something similar for yourself. You're going to need a solution for a Texas address, and we have some recommendations for that as well. Track your days in each state. I just use a Google Sheet for that, an Excel sheet. I think it's pretty easy. If you're a remote worker, ensure your employer updates your payroll to Texas to avoid Colorado withholding. This is huge. Finally, again, file IRS Form 8822 to notify the IRS of your move, reinforcing your Texas domicile. And that's the complete guide to switching your tax residency from Colorado to Texas. The Texas two-step. From cutting Colorado ties to proving your Texas domicile, these steps save you taxes and stress. My top takeaway: act fast to establish Texas residency as quickly as you can with a driver's license, voter registration, and a solid paper trail to beat Colorado audits and to move over to zero tax status as quickly as possible. If you found this video helpful, smash the like button, subscribe, and drop a comment with your favorite Texas tax residency questions. Got a domicile story? Share it below, and we'll see you in the next video.